Both the euro and the pound sterling continue losing value. The decline began late on Friday amid Joe Biden's bellicose statements. Judging by his speech delivered during his visit to Poland, it's possible to say that the US intends to continue the standoff with Russia. It's obvious that Europe cannot stay aside, and it will have to support its NATO ally. However, the imposed sanctions have already shown that it's Europe that is suffering more than others. There is no wonder that investors are losing interest in European currencies. Just after Joe Biden provided his speech, the White House had to repeat a range of announcements, thus reducing tension a bit. However, Germany's chancellor refueled concerns by an impressive announcement. OLAF Scholz said that Germany would stop using Russian energy resources by the end of this year. The fact is that Germany is planning to be cut off not only from Russian gas and oil, but also from its coal. It's still unclear how the country will implement this plan, since it has not found the alternative to Russian energy resources yet. Europe is negotiating with Qatar on the gas supplies. However, the global energy operator has already said that it will hardly replace Russia. Even if the European Union manages to find new supplies of energy resources, the price issue will remain thorny. In any case, supplies from Russia will be cheaper than from other countries, thanks to its geopolitical position. Europe is already suffering from record-high inflation. In addition, it has not fully recovered from the pandemic consequences. Against this backdrop, the EU's economy may enter prolonged stagnation. The situation is also aggravated by the information disclosed by British publishing houses. With a reference to a number of representatives of the House of Commons, they unveiled that the UK government had not anticipated such an outcome of the sanctions imposed against Russia. What's more, Russia may take responsive measures which no one has predicted. It seems that Europe makes decisions without thinking about possible consequences, and this fact is also making European currencies less attractive for investors. Let us take a look at the trading charts. The euro-dollar pair managed to break the lower limit of the range of 1.0960 and 1.1050, where it has hovering for several days. As a result, the volume of short positions increased. Under the current conditions, the price fixation below 1.0960 on the 4-hour chart may lead to a gradual recovery to 1.0900 and 1.0800. The alternative scenario will become possible if the price consolidates above 1.10, and in this case, the pair may resume trading sideways. Meanwhile, the pound-dollar pair broke the intermediate support level of 1.3175. As a result, the number of short orders jumped and the price settled below 1.3150. This in turn triggered a rise in the US dollar positions. Judging by some technical signals, we can say that the bearish sentiment is prevailing in the market. It means that the pound sterling may slide deeper to 1.30 if the price settles below 1.3150 on the daily chart. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you in our next release.